Hey, good morning, everyone. It's Coach Chris coming at you at 11 a.m. on January 1st, 2025. And the subject of this video is something that I've recently started using as one of the tools for predicting price movement, support, resistance, etc. And on TradingView, it's an indicator called the Gann box by Zierman. It's a free indicator. And this is a daily chart that I have on my screen right now. I'm on Central Daylight Time, not that it matters for this particular chart. And I want to give a shout out because I was introduced this by a new channel I came across called JAT Winning Trades. I'm assuming JAT means just a trader. I don't know that for sure, but you really should check him out. Like I said, he's fairly new, but I've been getting a lot of value from his videos. I've got a link in the description below. So big shout out to him. I'm not sure what his actual name is, but I just call him JAT, just a trader. The Gann indicator was developed by a gentleman by the name of William Delbert Gann. He was a doctor of, I'm assuming mathematics or something. He was born in June of 1878 and died in 55. But what he did is he applied a different way of looking at the market. Geometrics, angles, Fibonacci retracements, and it takes a while to interpret it when you're first learning, but once you've learned it, you can quickly identify things like trends. Is the market going up or down? Trend lines, potential support and resistance levels, not only horizontally but vertically. One of the problems I have with drawing trend lines, which I do all the time, is that we try and force fit them sometimes so they can be very subjective, where with this, there's no subjectivity really around it. It is what it is, and then we need to interpret the data based on that. And so what it does, it identifies a swing low or swing high level, the most recent one, most recent significant one, I should say, and starts there and sends out a series of geometric and horizontal and vertical lines, marking this whole thing up into what I call little, not necessarily quadrants, but boxes, both vertically and horizontally, that the price movement then reacts within. And you'll notice, so we have the Fibonacci retracements, and he's colored these on this particular chart, which is really good. And you'll notice how price, this is a daily chart, so it'll become more obvious as I go into the smaller time frames, how important this can be. But when we look at this chart, immediately what strikes your eye, okay? Which way is this market moving? Which direction? Okay, it's moving up, right? All of these trend lines, you can clearly see. We start here at a low level and look at, yeah, we had a big retracement back a couple weeks ago, a week or two ago, but you can see how clearly it's going up. So let's just go to a smaller time frame. Let's go to the 5-minute, just get down there right away so we can see how important this can actually be. It just takes a minute to render this, okay? Well, I wish that was going to take. Let's go down to the 1 minute, I guess, right away. And let's go to earlier in the day. Okay, let's let that populate. There we go. There we go. Okay, see how quickly that's done? And so you can see here, I'm on Central Daylight Time, remember. Let's actually go back a little further. Apologize about this setup, but you'll understand more why I'm doing this in a minute. Let's let this repopulate. Hopefully it'll regenerate. Okay, so let's just look at this for a second. Now we're down to the 1 minute, okay? From this is market close, and this is approximately, what is it, about 1:30, 2 o'clock in the afternoon. So it's identified the swing low, and so you can see we have an area of up movement, retracement, up movement, consolidation, down movement. So you can see how quickly you can identify this. Now, let's just look at these areas and find potential support, resistance, and possibly predicting some price movement. So what you'll notice here, everything generated starts here. We have these angles. We have some arcs, which who would ever have thought of placing these on a chart to determine possible support, resistance, and price movement? So for instance, let's just look. Now remember, when we draw lines in a chart, nothing is exact, right? Just because there's a line there doesn't mean price is always going to hit that and immediately do something, okay? It's a zone. It's an area. So we know, for instance, let's just look at this top zone, okay? In this case, because it is drawn around that swing high, obviously price is determined off of that, so sometimes we will see immediate. But what do we know, okay? That price is likely, just looking at this, price is likely not going to go above 21,316, correct? Okay, so this area is kind of out of bounds, okay? And what else do we notice? What is price doing during this time period? Okay, it's pretty much trending down, okay? So that's another thing. Do we want to go long here at this point? Do we want to enter into a long up here? Obviously not, right? So remember though, when I do these videos, okay, this is for educational purposes only, and this is what I do and how I use this information. How you use it is strictly up to you, and you'll have to learn how this can help or hurt you in your trading, okay? For some people, this may not be for them, okay? If their mind works differently or they're at a stage in their trading career where they don't need this, I like to have as many tools in my arsenal as possible because I look for confluence. I look at different charts at different time periods, starting with the top down. The longest time frame is my overall, and then I go down from there because I'm a day trader and I scalp. So I want to know if I'm entering into a trade, do I have the highest likelihood? You know, I'm in a trade from 1 minute to maybe an hour max usually. So it is during the time frame I'm looking to enter a trade, I want to be successful, obviously. I want to enter at the best possible price, okay? If I'm going high, I want to enter at the lowest possible price and catch as much of the trend up as possible. And if I'm shorting, I want to enter at the highest possible price and get out at the lowest possible price, okay, in the shortest amount of time, and while catching the majority of the trend, okay? So, like I said, how you interpret it, there's a lot of information on this. Start at Wikipedia, okay, or Investopedia, I'm sorry, and it gives you some really good information here, for instance, on Gann angles versus trend lines, which I touched on, okay? Support and resistance, okay? Very, very important. Strength and weaknesses, okay? Timing, very, very important, okay? So also there's a lot of different indicators. I find this one to be very helpful for me because let's just take a look at this, for instance, okay? I do use Fibonacci's anyway, and here it's all on your chart, okay? 25 retracement, 0.38, 0.5, 0.618, 0.7, okay? So you'll notice, let's just take a look. Let's just assuming we'll start here at the left, okay? So we know that we're at a relative high, right? Okay, so what are we looking for? Price is trending down at this point. We've had a big run up, okay? So we know that price is likely, not has to, but it's likely to retreat. we're at an area where, look to the left, there's been no price activity up here. It's not been higher than this recently, and it looks like that is working. It is support in a support area. So let's consider the fact that we may want to get into a short, okay? So we notice price is coming up. We do have this Fibonacci here, and what is Fibonacci? It's either going to be support or resistance. Well, when we're going down, what are we looking for? Okay, we want it to not be resistance or an impediment to us going down. So look at what's happened here. We did get down. We got down to this 0.382, but then look what happens. It's been rejecting, and on the way up. Now we don't know this information yet, but you can. Let's just interpret this. We know that this has been an area of resistance on the way up. So what does that mean? It could potentially be an area of support on the way down. But more so, it looks like this area here at the 0.382 retracement is the one we have to. So do we want it short? Not yet. Not until we have more information, right? And so price comes down. Now you can see this 382. You can see it was support before. It's acting as support, but notice what it's doing here. We're starting to pierce through that 0.382 level. The more times we test a level of resistance, what is the rule? The more times we test it, eventually we're going to break through it, okay? It's just we're testing price. Here we got a little price acceptance to the downside, rejected off. Now this is resistance going up, okay? Here again, we wicked through, but we couldn't. Down. We finally get down to the 382, but what happens? We get rejected up, and now this may be a time where we possibly want to enter. We know we're not going to get much higher. You could put a stop up here with a lot of security, knowing that it's not going to probably go there. Let's just take a look and see how many points that is. That's around 30 points, well within our risk parameters on the NQ. So we could put our stop up here. Get over my trend line. Put a stop here. Okay. Make that a little bigger so we can see it. Okay. And we would enter somewhere in this range here, a short. Okay. Now, where's our price target? We know before this has been an area of potential resistance on the 0.5 because we bounced there before, so we want to be very cautious, but that would still give us over a 1-to-1, I believe. Let me just measure this out. Yes, that would give us 1-to-1. So we could safely say, okay, we're going to enter. We don't know, but we're hoping to get at least a 1-to-1. Now, where does 1-to-2 put us? Let's just measure 60 points down. We're 60 points. Okay, that just so happens to be the 0.75 retracement. Okay, so that's a point, but let's just put, hopefully, the bottom of the range, which is the 1.0 Fibonacci retracement, as a potential ultimate price target. So this would be a 3-to-1 trade. We're risking 30 points to possibly make 90. Now, remember, this part hasn't printed over here yet. So we don't know that we're going to be successful at it, but let's just shoot. And then look at, once we get to the 1-to-1, we can move our stop from here to break even. Okay. And as we go down, once we've gotten to the 0.618, we can move our stop down to the 0.382, and so on. Once we've got to the next level down, we simply move our stop now to that level, okay, with the intent that if this thing wants to keep coming down, we're going to let it, and sure enough, now, We're never, ever, ever going to get in at exactly the right moment and get out at exact. I mean, it could happen, but let's just say on average, we're not going to do that. Okay. So get that out of your mind, because this will cause a lot of FOMO and psychological problems in your trading. Is if you make a trade and you get a winning trade, but say, oh geez, I missed that whole rest of that move. That would have been another $1,000 I would have made. It's so easy to do, to think in terms like that. Stop it. Start thinking, first of all, being thankful you recognized the trade and that you captured a nice profit. Okay. What you did right in the trade. Always compliment yourself. Then again, say, was there anything, this is what a journal is for, was there anything you might have done, okay, if you had the chance over, to perhaps stay in the trade a little longer and get a little bit more of the potential that was there, okay, so that in the future you can capitalize on it, okay? Because like I said, let's just be thankful if you get 50. So for instance, this trade here, what did I say it was? To that point, let's just call it 90. Okay. So that's a huge trade. Okay. That's an $1,800 trade with one mini. Okay. So, I mean, that's a huge trade. Let's say you got half of that, $1,000. For most people, $1,000 for a trade is pretty good. But I want to get back to this. Change subjects a little bit, okay? So don't be so hard on yourself. Just continue to improve. But what I want to show you something here, which is another really cool thing. There's two more things I want to show you with this Gann chart that I really like. This video is getting kind of long, but it hopefully it will be helpful. Also, make sure you check out Jat's channel, J-A-T. It's in the description below. He just started it, and he's doing a great job. He's putting out a lot of content, and he's actually showing trades every day. So it's really important. But I want to show you something. Let's just assume we did get in this trade somewhere in this region, okay? And we're in the trade. So what we're looking at is potential problem points, obviously this Fibonacci retracement. But let's look at these arcs. So what the chart does is it not only gives you these angular lines and these horizontal lines, it gives you a curvature, okay, which is so unique and so amazing that I would have never, ever in a million years thought to ever do this, nor had the capability to do it this quickly. But notice how these curvatures can also act as potential resistance areas. So remember, when we're trading and in a trade, we're always looking for confirmation that we're to stay in the trade and or warning signs. So we're coming down. Now you look at this line here, we had several touches previously, so we want to be cautious of this one. This one, not so much. We had some wicks. We had a wick go through, which is not really that huge. Here we broke through it on the way down, and we had one breakthrough on the way up. So let's just call that neutral. But now you notice this one, a little bit more resistance on this curved line here previously. However, we blew through it, we retested it, and continued on. Now look at this line, okay? What would you say about this line? No big deal. We haven't had any tests of it, so it's probably a weaker resistance area. Now, we get down to this one, same deal here. But we know we're starting to get a little overextended, so we're probably looking for a reason down in this area here now to get out. And sure enough, we wick down with a huge, once we see this liquidity sweep to the bottom, we possibly could catch some of that wick, but normally it happens way too fast. So you'd probably get out, somewhere in between this 0.75 to 1 point retracement. But I want to show, the reason I want to emphasize this is, now look at on the way up how this price oscillates around this curved line and how important it becomes in the future, okay? This was the first time in a while that we've crossed through it. So now we come up, we cross through it, retreat back, cross through it, retreat back, come down and touch it. It's almost like a VWAP or an EMA. So we get away from it, we come back. And so look at how price for, 14, is respecting that arc. Never in a million years would have thought of that. And then obviously we're getting late in the day now, and so we consolidate down into that. It does recalculate quite a bit. Now, I just want to show you one other aspect of this. As I was stating before, normally when we draw trend lines, let's just go back and see another area of the chart and see if this will recalculate to, yeah, okay, that's exactly what I want. Okay. So you notice now it's anchoring on a swing low, okay? And you notice how everything emanates from that position. So, as I was stating earlier, normally when we draw trend lines, okay, we kind of force fit them. So let's just see if I can find an area of the chart. Okay, this would be a good example. Well, let's just see it. Well, let's just see if we could do the same thing here. If I were to draw a trend line on the way up, normally when we draw a trend line, we want at least 2 points of contact. So we'd have this low, 1, 2, that pierced through it, 3, hard to say. But you notice how subjective it is. So you could draw it here, you could go to the wicks there, you could go from one wick to the next, but it's very subjective, right? Okay, and we're kind of force-fitting things. You'll notice here, let's just look. These are auto-generated, these angles here. But you notice how they can be in terms of no subjectivity. There's no subjectivity in the drawing. This is clearly mathematical, how these were drawn. But you'll notice how price action actually respects it. So let me show you what I'm talking about here, because it's very confusing and may not make sense to you. Let me just show you. So we have a swing low. Let's just say we're lucky enough to identify a change of direction, and we get in somewhere at this range. Well, we're now in the trade on the way up, okay? Come up to the 0.25, we have a minor pullback, back up, minor pullback. But you notice what happens. Here we respected the angle. Up, back down, we did not penetrate this angle. Respected it. Came up, what did it do here? In this case, it's to the tick. It may just be luck, but notice how we respected it. So what does that say to me? What that says to me is, what did that take? Whoops. Let me just try. Yeah, I don't know why that. It's maybe because that. Okay. Oh, I got it. Let's get rid of it. Sorry about that. If I'm in this trade, let's just draw it to here. I am not worried, and I'm not going to change my stop. I can trail this trade along this trend line, and until it pierces it, I don't have to worry about getting out of the trade, do I? Okay? And it's not a subjective line I've drawn. This line was drawn and generated simply on mathematical principles. Okay? No subjectivity. And look at how it's respected it on the way up. Coincidence? No. You'll find this time and time again on this. Same with the Fibonacci's and same on these arcs. Does it happen every time? No. But when it does, like I say, this will allow you, because here, say you saw this retracement, well, you're now second guessing yourself, well, I better get out of this trade, it's reversing. Okay? But with this, we don't have to worry about that. We can move our stop and say, well, If it crosses that trend line, I'm getting out. But if it doesn't, I'm staying in the trade. Okay, and what happens? We're rewarded with another huge, another 30 points. Okay, so here we do break through. I'd have gotten out at this point because it also this arc here, but you'll notice it did cross back over and gave us some more, and then we have the liquidity sweep and the reversal. Okay, so you'll see, and it will do this time and time again. Here again, what we want to look for is, we don't want to just say, well, it touched it once and now that's it'll never go below. No, we want to look at multiple touches, like this arc here, where it may have pierced it with a wick, but the actual candle did not pierce through. Now on the way down, we have this arc up here that was respected going down. Any other thing here? Nothing really a lot that we can say. But here, look at how it respected that arc. Okay, so I know I went on and on with that. I hope it's helpful to you. It does take a while to use, but I have this always open on one of my screens just to get an overall look, because I can quickly, let's just zoom out to the 5-minute once again. And let's get a little bit more data on this chart. This is now the New York Open right here at 8:30. And the first, 3.5, 4 hours of trading. And we can see what direction is this market in overall. 5-minute chart, opening candle. Well, it's pretty obvious, right? We're going down. We're going from a swing high to a swing low. We're looking at 300 points of movement to the downside in a couple hours. Okay? Before, yeah, you might have. Now look at these angles again. Look at how it's respected this angle from 8:30 in the morning to 1 o'clock in the afternoon. How many times have we gone above it? 5, 10, 15. So we'll just say 15 minutes. We've had some piercing of it with these wicks. But here again, those are liquidity sweeps. So that scares most of the average retail traders, or their stop gets hit. And what do? Make them pay. Okay? So that's the Gann box by Zimmerman on TradingView.com. I suggest you start to put it on your chart and try and use it. Coach Chris out.